Good morning. Welcome to the workshop on Monday, the 10th of June, for our look at events for this week. Just a quick review of what happened last week. Bit of a fall on the FTSE, 172 points on the week. The Dow had a better week. Ironically, a lot of the focus is on this taper on, taper off in the US. Will the Fed taper the quantitative easing program, or will it not? Weak data is regarded as strong data because it reduces the chance of QE and vice versa. But in fact, midweek it seemed that good news and bad news was regarded as bad news. But anyway, I think finally we had the non-farm payroll release last week. 7.5% was the previous unemployment rate. It actually ticked up to 7.6%. That's deemed to be positive. Why? Because it reflects actually a lot of people returning to the jobs markets, which is down to sort of optimism more than anything else. We expected 165,000, so we beat consensus, coming in at 175,000 jobs for May. And I think, the data was pretty reassuring. The economic recovery is on track, despite the fiscal cliff sort of malarkey with at the start of the year, big tax rises and across the board spending cuts, and the US consumer has weathered the storm quite well. So that's the non-farm payroll. A lot of moves last week, some big moves in the Japanese yen. The rally in the yen was caused really just by pricking of the bubble. We've had a significant fall in the yen, which a lot of hedge funds have been on, and I think that it's really a very, very sharp bout of profit taking, and that's had the effect on the Nikkei as well. But we've seen a little bit of stabilization in that, and the yen has sort of declined somewhat, which has propelled the Nikkei higher overnight. So here we are for the start of a new week. Let's have a look at the data following last week's raft of data. The calendar this week is somewhat lighter. We do start the week with a holiday in China and Australia. So actually, the Australian dollar is under quite a bit of pressure, I think, because there's some very weak data in China, which we've seen, all to do with the Chinese trade, inflation, and lending, all falling short of expectations, but I think has weakened the Japanese yen quite sharply. For example, if you just see the new loans there, a lot lower than expected. The fixed asset investment less than expected, industrial production less than expected. So not particularly good news for China, where we're looking for some sort of a recovery. It does look like the domestic economic activity is really failing to pick up there. But anyway, on to the rest of the data, and as I say, not a lot coming out really. In fact, we have to wait till Monday night / Tuesday morning, which is the Bank of Japan's interest rate announcement. We're not expecting any change there really, but Abenomics, this chap Shinzo Abe, the new Prime Minister, or not new anymore really, his ambitious reforms with unlimited quantitative easing and targeting inflation of 2% seems to be having its effect. There is talk of some sort of intervention on the Japanese yen, which I think is nonsense, quite frankly, because it's not something that they'll want to be seen to be doing, because they've said their stated aim is on inflation and improving the economy, not weakening the currency. That is one of the side effects, as positive as it has been for all the Japanese exporters. Next data really after the Japanese rate decision, probably the unemployment rate in the UK on Wednesday. We do have manufacturing production. There's also this constitutional court ruling as well to do with the outright monetary transactions, or OMT, in the Eurozone. That's a 2-day event culminating on Wednesday. I'm just not sure about what effect that'll have really. Unemployment rate, it's been a bit of a sort of a flatlining really of the jobs, the improvement in the jobs market and the unemployment rate in the UK. We're looking for a drop in claimants of 6,800 for now. Obviously anything worse than that could have an effect on sterling and obviously the FTSE. We have the New Zealand rate decision on Wednesday night, Thursday morning, so that'll impact us on Thursday morning. We do actually have the federal budget balance. That's something that is published in the US later on Wednesday. I don't think that really affects too many of our participants, but that does have could have an effect on the markets, but it's quite late at 7 o'clock. Hopefully most of us will have shut up shop by then. Australian unemployment, well, you know, the Aussie dollar is under significant pressure. It's fallen significantly, having traded sideways really between August last year and April this year, but it's fallen precipitously, and I think possibly we might actually see it hit that sort of 93 level against the dollar at some stage this week. Very overstretched though. We're expecting some sort of a snapback at some stage. And then we have the most important data of the week on Thursday, retail sales. This really underpins how well the consumer is going. 0.3% expected on the core retail sales, and the headline figure of 0.4%. Weekly unemployment claims, well, on the back of the better than expected non-farm payroll last week, the market weekly rates bobbing around between sort of 345, 355. And then finally, on Thursday, we have the producer price index in the US. This is a leading indicator to an extent of the price of goods going into the factory. And then we have a very important bit of data, really, the University of Michigan consumer sentiment. You know, these consumers are remaining very positive. We had a particularly weak number in April. The May number then came in at 83.7, has since been revised to 84.5, and we're maintaining the momentum at 84.9. So positive across the board. Anyway, that's it. A longish little review here, but thanks very much for listening, and we'll be back on Thursday at 8 o'clock. Thanks very much. Bye for now.
If you would like more information about trading the right way, Trendsignal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trendsignal website for the latest events and to book your free place.